Hello everyone, welcome back. I promise to go much deeper into the lower time frame of how I will be trading this analysis here. Um, the reason why I'm doing this analysis very late here, as you can see, the time is 7:57 universal time here. So it's around 2 or what you call 3:57 Eastern time. This is the easiest time to trade for some reasons. That's why I'm doing this video this time, around this time. This is the easiest time to trade. I will not say why, because that is my personal, it's not personal, it's an old playbook, but I will not give it out for free right now. So due to the subjective nature of Elliott wave, this is how I expect with the wave 3 to end. So this current decline is not wave 4, it's with 4 of 3, and we will be having with 5 of 3, and with 3 should be ending here. And we will not be looking at wave 4 and wave 5 now, because the termination point of wave 3 will indicate where we expect wave 4 and wave 5 to go. So I don't like to forecast a movement like I like we are the ones moving the market. No. So let's just look at the wave 3, as I've indicated here. Wave 3. So for us to confirm that this is wave 3, it's quite simple. You draw your fib, and you see where the 1.618 is. The 1.618 is here, and we have major price level there confirming the wave 3. This is wave 3 of 3, wave wave 3 of 3, wave 4 of 3. Now we have wave 5 of 3 ensuing to end the wave 3. But within the wave 5 of 3, we have a 1, 2, 3, and a 4, then a 5. Alright. So since we have established that fact, we will lower our time frame of focus to this region here. Alright. So the only problem here is, if we are saying this is wave 4 of wave 5 of wave 3, where do we expect this wave 4 to truncate and reverse market direction? That is the problem here that we will be discussing today. So our first our first artillery, or our first soldier we can deploy to solve this problem, is using the 1/1 of a recent decline or a previous decline. When we compare the 1/1 of a previous decline, we have our 1/1 coming to this region. So we can see we are very certain price may come here, or at the 0.618 level. Again, when we run our FIP retracement to check the divisions of this major price levels, we have the 0.333, an arithmetic ratio, very important arithmetic ratio, which indicates division, also on this same line. And we have our 0.5 also on this same particular line. So we have two important support levels. If price do not respect this, we expect price to come down below here. Right. So this is what we will be doing. So as we have established, we will see between this and this which of them is the most likely to happen. Now we can see this wave 3 here It's an extended wave. Let's call the RSI in. Okay, so with the RSI, you can see an overbought here. There's no divergence, so it's clearly is wave 3. And let's measure this wave 3 here, and we can see that this wave 3 here is an extended wave 3. It's an extended wave 3 ending on the 2.61. Therefore, if we are having an extended wave 3, it is okay for us to have a double retracement. That means it's okay for price to come down below here. And as you can see, this is an ending wave 5, or a diagonal, an ending diagonal, and it's okay for wave 4 to come in, to come very down here, and it still obeys the rules Elliot set in place. Not to not waste my time, let's dive into it. So again, since we have established that this decline is not yet complete, let's confirm if this point is actually the point for the next decline to start from, or this retracement is over. So when we run our fib here, we can see there's no actual. Okay, this point is approximately the 0.236, which is also an important ratio, and because the decline here is so intense, it's so sharp, we do not expect a larger retracement, just a smaller one, and we move downwards. All right, so let's go and see if what we are saying is correct. So let's delete the RSI for us to get more room to discuss this thing. All right. So we want to know if this retracement here is over. We don't want to be caught off guard, or we don't want to be trapped in a triangular formation here, because when we are trapped, you can't outsmart the market. Everything is rigged against you, trying to trade this consolidation. So we will try our best not to get trapped here. So let's uh, deploy our almighty one by one to see. When we deploy our one by one, we can see, yes, one by one truncating this rally. Now we can see we are heading downwards. So we talk about this trade I took just 30 minutes ago. We talk about it. All right. So as I said, this is the easiest time to trade, and we will see why I was saying that. So since we have established this retracement is over, we have established this point truncated the retracement. Then let's see the one by one of this decline. And when we do the one by one of this decline, again we have our one by one here, and our 0.382 also here. So again, these two important points, it kept repeating. Yeah, that means we should take very good care of them. We should monitor them well. All right. So let's further lower our time frame to see what is happening here. Now let's see. Let's again confirm if the decline is indeed over. Let's deploy our almighty one by one again. One by one. Now you can see the one by one truncating this move here. This again confirms that we can comfortably trade this decline. All right. So this is how we will be. This now we will lower our focus here on the daily, because we have confirmed that we have made several confirmations from the daily to the 15 minutes that we are going down. So let's look at the 5 minutes internals and let's see. Now we will just lower our time, our focus here to see what is happening here. Right now, when we move to the 5 minute time frame, so our current projection is that we expect price to come down here. But since today was a very dull day, consolidate, much consolidation, ranging markets, we just forecasted that we just went in for short gains and see what will happen tomorrow. Alright, so to begin, how I traded this market, the market is closed already, so we draw a line from the opening. This is the opening here. The opening is a very important line here, which should be considered every time when you are trading. You should indicate your opening to get. Now this is the low of the day, which we have price retesting, and this is the high of the day. So you set the boundaries and you look for trades within this period. And again, we will draw our one by one to see where, if we are saying we are looking for a decline, where is the decline? Now you can see this exactly, price terminated exactly on the one by one axis here. Alright, the one by one point here. So we are getting enough reason for us to take a shot here. So all what we have to do is wait for the market to give us enough reasons to trade very easily. So we entered around here. We entered around 7:30, and we have an easy trade here. So as to the details of how I monitored this trade, I will not go much into it. Now I wanted to show you how it's been done from the monthly to the weekly to the daily up to the 5 minutes and even to the 1 minute. So to prove I actually took this trade, we will look at our broker here, and when we look at it, you can see, you can check the time here, and you can check that's the only trade I took today, right? So this is just to show how it's actually being done, trading, uh, lowering the time frame to confirm if you should take a trade or not. So thank you. We'll be doing more of it. Um, Look for my Twitter page, my YouTube page. You'll find similar projects here. Like and subscribe. You can comment any question. I will be there to answer. Thank you.